can ask me. Okay, you're welcome to Plan B Express weekly. So we have Monday, Tuesday, and Thursday presentation, training, and trading. Now, so when you want to get exposed to these strategies called Plan B Express Hybrid CED trading strategy, price action concept, basically understanding candlestick chart pattern, market structure and trend, key levels, support and resistance, all right, demand and supply zone Fibonacci level, okay? Volume concept, which has to do with momentum, then smart money concept, the few things we pick the inefficiencies, other blocks, break of structure, market structure shift, liquidity concept, all right, MMM, that's money, market maker model, buy side, sell side liquidity. All right, liquidity range, weekly liquidity range, daily liquidity range, session liquidity range, which has to do with the low and high, diagonal. Then we have internal and external liquidity. All right. So 1 day to 1 hour, 4 hours to 15 minutes, 15 minutes to 5 minutes, 15 minutes to 1 minute, sorry, 1 hour to 5 minutes, right? 15 minutes to 1 minute. Then trading plan. Now, among all these, this is the one that's more important, trading plan. Risk management, trade routine and range, right? Right, trade routine and range, and then trade psychology. These are the major things that matters, that no matter what you do in all of this, if you don't work on this, you have nothing to get. So let's go to the market proper. I'm going to look at now. So there are things I've often explained to people when you must trade and make money. Now, so let's look at, we're going to go into yesterday when I was telling us about the Bitcoin need to crash, that we're going to crash down to 114, 112, 111, and 109,000. Then you can see what's happening. I'm going to show you something very quickly, and so you have to pay attention. I think this video is going to be very important for you. Now, so trading, and I've told you, if you're a beginner, very simple, you want to learn about some of those basic concepts of forex trading and all of that. You don't need anybody. You can learn on your own about those basic concepts of trading, forex, and all of that. That's why I told you about going into this platform called babypips.com, babypips.com. So you just go there. You can learn so many things. All right, if you go to my YouTube channel, search for my name, of course, you can learn some things. All right, so learning is, you can learn too many things, but you have to be very careful again, not to get sold to just, learning and trying different strategies and all of that. So you can learn virtually everything you want to learn as a beginner here. All right, learn forex. So learn how to trade forex. So you can learn from, they have kindergarten and all of those things. So you want to learn from all of those basic things, kindergarten to nursery to pre-nursery, school of pipsology. All right, track your progress on log, preschool, give you what is forex, and I do not teach that. So kindergarten, okay, forex broker, 3 types of analysis, types of chart, elementary, all right, beginner's guide to technical analysis, all of this, okay? Now, so you see, put padlock. So to measure your progress, you have to sign up, log in to an account. All right, it's free. You are not paying anything. So, but let's look at market. Now, if you're following me, go to on the comment section. You want to put your account detail there. So if you look at Bitcoin, now we can look for another instrument eventually to check. So, but yesterday I was telling us about, there are things that matters in the markets, like I was saying, concept. Now, first thing I have said is that price action. And now in your price is where you have structure. So you have candlestick, you have market structure, through trend, and then you have the support and resistance, demand supply zone. You don't need to know all of them. You don't need to start learning all of those things. You just need to learn basic that works. And then where you need to start from for basic that work is very simple. Now you can see Bitcoin is still crashing down. All right. And then, so let's look at, can we find any trade at all? Or let's just look at Bitcoin. White told us yesterday that we're still going to be selling, combining support and resistance strategy and all of that. On a daily time frame, if you're a day trader, what I come to do on a daily time frame is just to check all right, what the candlestick is printing. That's the first thing I come to check. Now, all of this line you've seen, there's a place you need to learn about key levels to mark them. Now, so all I need to come and check on a daily time frame is to see my candlestick pattern, where it opens from. So let me take out this. So there is a need for you to open your daily time frame. Okay, let's take off all of these. They have finished their work. Now you see when I mark this, this is 1, 2, 3, 4, 5, 6. That's since last week. Market has been crashing. And you saw what I check on my daily time frame is very simple. I want to, of course, see this market structure, the key levels. Now, if you look at this key level, you can see that Bitcoin invariably, we should be creating some bands. You can see why I told you that the market should come down to 111,000 plus. Now, when I was saying yesterday, it looks impossible. Now, if you get there, you now want to look at market need to react. You don't just get there and now buy. There are things you need to check out. But of course, tentatively, you are saying this is a key level, 111,700 thereabout. The market should come down there. When it come there, if you eventually break it again, that means the only hope you can have is that 109,000. So when I tell you that market is going to do this, it's not an assurance, it's a probability, but a higher measurement of probability. So that's why you need key levels. I'm not going to be dwelling on how to draw the key levels and all of that. Now, so you as a day trader, if you have checked so when I come in a day, I want to check the previous day candle closes negative. Look at this. This is bearish. It's not the color, but how it opens and closes. Okay? How it opens and closes. I talked about that yesterday. I don't know if I posted a video of what we did yesterday. Now, how it opens and closes is very important. Now, this candle actually opened, first went up, came down, and created a low, and closes here. So you expect the new candle to open from this close. Sorry about that. So network want to disorganize us again today. All right. Okay, so what I was saying is this. Now, on my daily time frame, I haven't checked some key levels, which you want to look at. Key levels means a series of touch points areas. Now, series of touch point areas. And then when you can get that, you want to look at specifically the candle. So you look at this candle yesterday, this candle. So what we measure is very simple. You want to look at the high of the previous day candle. You know, you are coming in for the day, irrespective of the time you come in, then, and the low of the previous day candle is very, very important. Okay, this becomes just like your trading range. Now, you scroll down to 4 hours sometime, and you want to look at what plays out to this market. So me, most time, what I check is that having seen the market for the day, now the best way for me is that if I have bias that the market was bearish, you want to grab maybe the high of the previous day. But depending on how long the candle was, and that's what you need to understand. So if I go to 1 hour, now I'm going to find a different structure entirely. Look at it. On 1 hour, so what I'm going to find is a different structure entirely on my 1 hour. Now, very simple. If I go to my 1 hour, remember you have marked this was yesterday high and this was yesterday low. Now, the market actually so if you want to look at how the day, where is the new day candle and all of that, probably you can right-click on your trading view and go to settings, okay, and probably put session breaks. Now, when you put that, it's going to demarcate yesterday, today for you, okay? So now this has demarcated yesterday, today for me. So this market actually came down. So you expect that the market opened from here. So what we're expecting is that the market actually could grab the low of the day or the high of the day. But the best bet for me would have been if you had grabbed the high of the day, because the bias, you are bearish. Now, but nevertheless, it's not an issue. It came to grab the low of the day. But the challenge is that the trend of the market is bearish. Secondly, we are below the weekly key level, which is here. So that means I should be targeting from this key level down to another key level, which is a daily. I mark it. You may not know how I actually mark this ones. Now, but so this is the point here. You now have marked all of these. So if that happens, I need to mark this. Okay, I need to mark this. This was yesterday candle. I will mark this one. Look at this candle here. This is marking of pivot point, which is support and resistance kind of a strategy. So I've marked this, all right, because this was yesterday. And of course, this was the low of yesterday. This was the high of yesterday. Now, if I stretch down to 15 minutes, perhaps to find another major area or pivot point, remember you have marked this, okay? I'm now on 15 minutes, haven't marked this. You're looking at the market could travel up here, sweep this liquidity or failed rally. Okay. Now, this is because if you're a day trader or a scalper and all of that, if I still want to refine the market, I could step down to 5 minutes. All right. I could step down to 5 minutes. So look at it. You don't just step down to 5 minutes for stepping down sake. I look at what has market done yesterday. So that means this market, as it is here, this market as it is here, the market, I'm looking at the structure. So the market actually rallied back up here. Okay. Now, this is a very fantastic thing you now want to check about the market structure. So here, that you draw a trend line, because most time people draw a trend line, say market is going to reverse from this trend line. No, it's not a yardstick. Your trend line is an imaginary line. Now, so look at what I'm looking at. You remember my bias is that we're bearish. So here we go. Here we go. The market has actually traveled a lot, right? So the market has traveled a lot. Now, so I'm going to look at, this is a high that was created, right? This is a high. So you look at the previous high that was created. Look at it. To my left, this is a previous high that was created to my left. Now, this high retro and produce this low here. Look at it. Now, this is purely market structure. Remember, I said the thing you need to learn are, look at it, the 4 important things that you need to understand in the market. First, and I'll be saying this time without number, first is called price action. So you can write it down if you want to do that. Second is called liquidity concept. Or first you can do the volume, which has to do with momentum, and then liquidity concept, right? And then you have discipline. Now, discipline has to do with your planning, psychology, and all of that. So these are the 4 things you actually need. Now, in this, I say predominantly things that matter in this, candlestick, okay? So I've sent to you candle, Bible, whatever, candlesticks, all right? Market structure, you can call it MS, all right? Support and resistance, okay? Now, these 3, so MS/trend. So now, so if that, so this volume has to do with momentum, and then liquidity concept now has to do with, all right, liquidity grab, and then you can extend that to inefficiency. So, but we're not going to much to that. Now, so if that happened here, look at what we're doing here. Here is a high because it's the structure of the market. Here is a high, here is a low. Here is a higher high than this. All right, so this is higher high than this. What you expect is that the market should come down and now take out this to create another higher high. So what really happened here is very simple. I'm just teaching you price action, purely price action. Now, what happened is that I'm going to identify a reversal to enter a trade. Because 3 major ways you enter a trade are this. Number 1, you enter a trade like this. Sorry, let's look at it. You enter a trade like this. 1, you enter a trade at a reversal. You enter a trade at a breakout. And you enter a trade at what? At a continuation. Okay, so you enter trade in a reversal point, you enter trade at a breakout, you enter trade at a continuation. So this breakout and retest, pullback, and continuation. So these are the three major ways you enter a trade. So let that be in your mind. Now, so what will happen now is this. Look at it where the market was moving from here. Here, this is a low, this is a high. Now, this is a low. Now, this low didn't get back to this point and, of course, was taken up. Then that means after this pullback, as the market shows a sign of bullish move, you are finding an entry and your stop loss below this, the previous low. So that means, what can I see? I want to see a kind of candlestick pattern, maybe bullish engulfing candle, hammer, and all of those things. And now that happened, if I enter here, I probably can be targeting here to be a potential resistance. Now, if it's a potential resistance, as you break it, so what has happened here is called break of structure. So look at it here. It's called break of structure. Now, market may not form a textbook format of break of structure, so you have to understand that, okay? Now, so this is called break of structure. So the market probably have broken above this. That means it's creating another swing. So here, it creates another swing over here. This is another swing. Okay, so let me just take it this way. Now, this is another swing. This is another swing low. Now, every swing that was created, an impulsive, a corrective. Now, every swing created is either a support or resistance. So since we are in uptrend, every impulsive move and corrective at the point of stopping of the impulsive is a resistance, while at the corrective stop is the support. So just get that to understand. Now, but this is the thing. I'm combining hybrid setting now. Now, this is a swing low and this is a swing high. Now, this is what happened. Now, you correctly find this is a swing low, this is a swing high initially, and then a swing low. But unfortunately, we have break that, and then this one had gone lower than this. That is to say, if this one have gone lower than this one become an internal structure. So you don't get it confused, right? So here, this is a support, this is a resistance, this is a support, this is a resistance, this is a support, this is a resistance. Here you can see this one now, it never got up to this point. Now with this is a support, this is a resistance. Now, this resistance, this last one, was broken. That's what they call it break of structure. It was broken, that's what they call it the break of structure. Now look at it. The candle fast move and jump above this. This is what predominantly we call it fake out. And that's what they call liquidity sweep in smart money concept. This is called fake out. Now, because after this market broke and now returned back here, instead of this market to return back, perhaps maybe not getting here, or even if you sweep this liquidity, to break above this again to be another break of structure, it failed to get there. And now this is what you are now paying attention to. Remember, this was a resistance, right? Now, this market had broken this. And now what I want is very simple. What is the support that gives birth to this resistance? This is that man here. Resistance of this guy traveled down here and got supported and create another resistance, but broken this. So this guy, and this guy, they are very important. Which means this previous high and this new low and this recent high, these three people are very important for you. Why? Because this man here had created, okay, look at it. This man here had created what you call BOS here, right? BOS. Okay, so BOS means break of structure. So it has broken out of this structure. Now that's BOS. Now you want a continuation of that? No. So this is a higher high. Now what happened? The market aggressively came down and swept this one. Oh, that's good. Could it be a sweep of liquidity? Maybe. And that's why you said here, tentatively, it become what they call COH, which is called change of character. Or they call it, another name they call it is market structure shift. Very simple, okay? So, but just understand that the market has changed the movement here. Now that this has happened, you are tentatively and so certain that the market is about to change direction. But are we agreeing to that? No. Now we need to have something. There's another thing they call Kwashimoku level or pattern. Kwashimoku pattern means you have a previous high or low, as the case may be, and then we have a low, and then new high was created. Now, this is manipulation, which is sweep of liquidity. The market return back here. You must wait. In most cases, if you now go into smart money concept, in most cases, they are now waiting for something they call here as this last bullish candle before the massive move or the important move happens is called order block. Okay, let's look at it here. This is called an order block. Now, afterward, we have series of inefficiencies. Look at this, an inefficiency, all right? This is an inefficiency, this is an inefficiency, this is an inefficiency. So you have inefficiency almost all the places now. So now this practically almost look like a displacement, okay? Now, this is the point. You are looking at so many things here. Why your market you're targeting here? Look at it. This market has swept this, and that is change of character or market structure shift. Now, this market rally up here is either the market gets to mitigate the liquid imbalance, all right, inefficiencies, or actually travel to the order block and stop, which is going to create a double top, as the case may be, whichever one. And now when you get there, you are interested in the candle pattern printed. But this happened that this market got here and failed. So here is a higher high, HH. Okay, let's make it a capital letter. So here become this higher high here. Look at it. That was the highest you saw. Now it went and created a low. Now, I'm just sure somebody, because I told you I just decided to teach today, okay? Now, this become a low, which is, all right, which is a lower low, all right? Now, this one is another point you are going to record. And what does this one become? This one become, right, a high, but lower than the previous one, which you now call LH. Now, so this actually was your point of entry. Conservative trader may not enter here. They are waiting for the market to do something. They are waiting for the market to do something. That is to say, they want the market to actually cross below this, but actually this is what they are waiting for. All conservative trader will not enter this. You know, this 5 minutes, because they are swing traders, most of them. Now, see where they want to enter from. But some of us who are doing snapper entry trader, we will have entered earlier. So for me, as the market failed the rally, I'm in the trade here and put my stop loss. Okay, this is a learning for you. So this is an engulfing candle. My stop loss is above this high. And then I'm targeting 1:2 risk reward, and which is sometimes you can even target this low. So, but targeting 1:2 risk reward will be somewhere here. Okay, so that's what it is. So now for another trader, what they are looking at, that's why your trade is mechanical, right? Now, what they're looking for is this. The market had failed, and then what they want is that a return back to this market structure shift, and this is it. So this is another perfect entry, okay? This is another perfect entry. Very perfect entry for selling here, because this has actually seriously failed. Are you seeing it now? So very simple. That means that fellow is going to be selling after this fail. This is a close candle from up. So at the close of this candle is your entry. And of course, your stop loss is going to be probably above this point here. So some, they are doing sniper entry. They can take it above a fair value gap over here. And then 1:2 risk reward. And that's exactly what they trade. Then the market continue. You can see something. The market broke. This is a break of structure. After a break of structure, you need a pullback. This pullback, but this never break this. This is another structure here. Look at it. Now, this structure, let's take it in this way. So this structure, look at it. So we now have another fair value gap here, which means this one again is another order block. Okay, another order block. Now we have an imbalance of what you call FEG here. Okay, so let's take it in. Right, you have an FEG here, you have another one here. Now, so the market return back an inducement, but it's a bearish market. After the inducement, it comes to fill this gap. Now, this is a point. Most people, when they enter market at an imbalance, they use a 50% region. So that means the person entering the market here, he's selling Bitcoin, right, at this 50% region and above this order block as his stop loss. And again, 1:2 risk reward or targeting this low here, this low. So the market broke it newly and massively, and there you go. This is the market again. This is already 1:4 risk reward, risking whichever amount you are risking to make ×4 of it. Now the market continue. So you know this is a low. The market broke it and retest. Now this is another failure. Then you are selling again. Now, ordinarily, you should be selling to this point. Now, let's see what's going to happen again for this market. So this is another a high. This is a low. This is a low. This is another high. This is a new low. Now, we have a recent low here. All right, so we have a recent low here. This is a lower time frame anyway, so you need to be aware. Now, you have a low here, you have a high here on 5-minute time frame. So which is like support and resistance. So you need to understand another high here. Market is mechanical, or trading is mechanical if you can be patient. That's why sometimes you look for market, you look for entry you wouldn't find. Stay off. Okay, so now here you see something here. This is the lowest now. So what's this market trying to do? For me, this is a displacement. So do we have a sweep of liquidity here? Then you'll be looking for a sell, possibly. That's one thing. Secondly, could we reject at this low? All right. That now make you to look at your candle pattern. Now, for me, this is a rise and crash. Okay. So, but are you concluding that? No. You're waiting to see reaction. So rise to crash. But this is the point. Now, when it has come to this point, what type of candlestick are you going to experience? A massive move up and a top close candle, which like a gravestone doji, whatever, or bearish engulfing candle, all right? And then you want to be selling. So that means we're waiting for a sell. Now, this is a trap for anyone. When do we now know that this is not a trap? Okay, fine. If this market now do this, look at it. If this market now do this, you can see how trading can be very fantastically mechanical. So if this market now do this, and then return down to somewhere here or anywhere here, and then move up here, okay? So that means it has, so move up here, okay, something like this. Now we are waiting for an entry here. Okay. Now this is the point I want you to know. Here, this is a high. If the market break above this high, that become a market structure shift. Now, if it does that, you are now looking at the area. So here was the last low here, was the last bearish market candle. Sell. So that become another block. So we have FEG almost everywhere here. No problem. This is, for me, this is total displacement. All right. You want to ask me what is displacement? I may not be able to explain that. So if this happens, so you can see patience is required for you to be profitable. Now I'm waiting for this market to actually break above this, retest this, okay, and then, or continuation of itself. Massive one, rejection, and then I will be selling. Or normal market adjustment, pullback, and then moved up here, then that means we're finding another kind of market structure shift, and then return back to see maybe a fair value gap in between anywhere here. And then that will now be your entry to be targeting probably this high and this high over here. Now, this is where patient, but your patient cannot be powerful if you lack understanding. So knowledge is one of the first things that will create patience. If you don't have knowledge, you may not be patient because you are agitating for nothing. Now you can see gold still selling. Where I took a buy, we're trying to find a buy somewhere here. And I was telling the people, I said, if the gold, yeah, this was a key level. If the gold sell off, if the gold couldn't make it up, just sell. I think they sold from here. Any of them that listen, just sell, and that sell still continue. Look at it. It has created a low, another high. Now it's about to break this. Once it break this again, this is another key level. 3306 will be where the next move for gold will be. But this is the same strategy. Now you follow all through. Now this is Fibonacci retracement. And when I found this, look at the entry here and look at an imbalance here, but this is at the golden ratio and the market sold down. And then that's the key level down here, 3301, 3306 or thereabout. Now, sorry, stop playing with my screen. Okay, so ladies and gentlemen, I've told you I was going to be training today. Quite unfortunately, I may not be able to give us trade. So this video recording, I'll purposely, when I finish, I'm going to upload it and give to you. You want to sit down with it. Trading is mechanical. Now, even if you know all of this I'm explaining without building your psychology, then you will fail, right? Your psychology is very important. All of these I've mentioned, smart money concept, all of these liquidity concept and all of that, fine. They are there, fine. But if you don't build your psychology, forget it. I trade most time, and sometimes I don't even have time to trade because I'm just trying to meet up with some pings and some persons. Sometimes I put a trade and I'll forget it. How can I forget a trade? Because of maybe at the point of entry, I've already seen maybe where my stop loss is, because that's where, intraday trading or swing trade comes to play. So you can imagine if a market was entered to here and I'm trying to scalp in between, but the short position I have was still going on. And that means chances are there that gold, I will rock it down back here to 3301 and eventually weekly key level 3274. Don't doubt it if it happens. But this is not a guarantee. This is a high probability. Now, ladies and gentlemen, marking key level is the first thing you must learn, because top-down analysis for your market and understanding your support and resistance strategy help you and put you ahead of others. I think this is what I have for us tonight. And I've told you that I was going to be training, and this is the training I have for us tonight. I'm going to post the record and for you to have. You want to have access to more deeper insight and training and all of that, get your account funded, increase your fund, and let us build together. To be very candid, this space is sweet if you can build on basic knowledge. Don't complicate issues. Don't want to learn, holy grail. Oh, this is the winning strategy and all of that. No, you really need to work on yourself. So my name